Hi, this is Lee Gettess with the weekly analysis looking at the week of January 19th, 2010. Of course, we started Monday on Tuesday this week, make things a little different. All charts we'll be using are courtesy of Gettess Financial Technologies and their Trade Navigator software. First, we're taking a look at the 30-year Treasury bonds. They finally had a little blow-up last week after being beaten down hard for about 6 weeks, as you can see right through here where I'm moving the cursor. They had a couple little tiny weeks and then blew out to the upside last week. Now, that could be just a one-bar wonder, and they could turn back down, but it also could be an indication of some energy building for a rally here. So far this week, they have held in the vicinity of this red line right here. That's the 116.20 area, we'll call it. And if they can hold in that area, then I would expect them to head up to this blue line here, which is roughly the mid 118, called 118.15, 16 area. I would expect them to go up at least that far as long as they hold the red line. And there's even a chance that they could just blow out in a major way and go up here and where you see nothing in particular, but the next target I have is very close to 120. So they could have a serious rally if they do get going. If they do break back down, we'd be looking at the area where the green line and the blue line coincide here. Let's call it 115, 24, 25. I would expect that to be the next level of support. But I think the biggest potential move anyway is to the upside. Of course, we've got a PPI report coming out Wednesday morning that could have an impact on that. Moving to the stock market, we'll look at the E-mini here, and it's a broken record. It's done nothing but go up since March, and I could blow up this chart and let you see closer to the price action, but there's really not a whole lot to see. They've just been driving up here, and they opened this week by turning up and rallying immediately, and they're sort of making a double top with last week in this area. You'd have to think this move ought to run out of gas at some point, not on a permanent basis, just to give us a retracement of some kind. I mean, looking back here in July, we had one retracement that got back to this mid-channel line, the purple line here that we're looking at. And I think we ought to be close to time to have a move like that now. If they can get over 1150, and I'm not 100% sure that they can, but if they get over 1150, I'm going to start looking for reasons for them to be turning back down. There certainly is other support in this area that could hold them, but this purple line here, which is now roughly the 1075, 1080 area, that's what I'd like to see them break down to, because I just think that would be a wonderful buying opportunity. For those of you who have asked, I don't actually trade this weekly stuff. I'm giving you weekly analysis. That's not what I trade. It's the framework that I do my both short-term trading and day trading within. It's always helpful to have an understanding what the big picture is, and heck, I do monthlies and yearlies and everything else, but I'm just sharing with you the weekly analysis I do. This is understanding what's going on in that weekly chart. Helps me a lot with determining what I should do on the shorter time frame stuff that I actually do trade. Okay, well, that's what we've got for you today. Thanks for listening in, and hopefully you'll find something that'll make you some money this week. Good luck.